So today we are going to talk about payments analytics as presented by IBM. So we'll start with the introductions. So quickly, myself, Namit Agrawal, I am the leader of IBM's Payments Canada Competency Center. I lead our go-to-market and our payments offerings. Plus, I support the delivery of our payments modernization engagements at both of our large and small financial institutions here in Canada. Today, I'm joined here by Roger. So, Roger, if you can go ahead, please.
Hello, Roger Oliphant. I'm executive architect at IBM. I have responsibilities for the IBM Payment Center as part of the global architecture team, but also support a number of strategic clients around the world in their payment modernization efforts.
Great. Thanks, Roger. Okay, let's quickly go through the agenda. So today we are going to talk about payments analytics and why is it important for financial institutions. We will go through some of the real industry use cases from our clients worldwide to understand how our clients are actually using the payments analytics to help improve their payments modernization business case. After that, Roger will take you through some of the practical reference architecture that we have used to implement these at our clients. Additionally, we do understand that the various financial institutions could be in different maturity level with respect to your journey for payments analytics. So we will present to you a prioritized roadmap how you could implement the various payments analytics capabilities as you increase in maturity. Yep, so we'll go through that as the last part of the agenda. To start off, we all know that we are in the middle of Industrial Revolution 4.0 that is now being driven by the intersection of humans, machine, and AI. This revolution obviously has the potential to dwarf all the earlier revolutions, whether it was the machines, the factory productions, and lastly, the electronics and the computer era. And we all know that this Industrial Revolution 4.0 is all driven by data. We can literally call data as the new gold. So it should not be a surprise to most of the attendees today that data is a key enabler for payments modernization. We have seen both retail and commercial customers are demanding that their banks should know their needs better. They should be able to offer them personalized solutions and be able to exceed their expectations. Also, with the launch of the real-time payments, which we are expecting to see in Canada next year, we will see a lot of rich remittance data being made available to the financial institutions, which will not just provide an opportunity on how to leverage the content of that data, but also will be a challenge that will require real-time data processing capabilities. On the flip side, with the digitization of payments, we are seeing an increased threat of fraud and cybersecurity. So again, data will be valuable for us to support early detection of the threats and mitigation of those threats. Looking at the operations side, we know that the payments operation today is still highly manual intensive. A good use case is the check processing, as we know still requires humans to actually look at the images of the check and make some decisions. We have similar challenges on the wire side as well. However, we have an opportunity through data that can help drive insights, that can help the efficiencies and automation in these operations processes. And lastly, we have seen technology advancements such as the adoption of ISO 20022 standards, or the cognitive or the AI capabilities that are basically helping us enable new innovation and new services being offered through the payments modernization. However, all of that is dependent on availability of data. So that's why we believe that data will continue to drive the purpose of payments modernization. However, if we look at the payments modernization business case, we do realize that the financial institutions do need to spend a huge amount of funding investment to meet these industry demands. For any depending on the size of the financial institution, the investment required could range from 100 million to almost $500 million. for the payments modernization initiatives. However, what's unfortunate is that the business cases for payments modernization here in Canada are primarily based solely on the need for regulatory compliance. So, i.e., bear the cost of modernization since these are must-have changes, and there is very little consideration for the upside or the revenue generation opportunities that are there from the payments modernization. That said, we strongly believe that data analytics has the potential to drive new revenues, provide savings, and that itself is going to change the business case and is going to make it better for the payments modernization business case. So I would thus say that payments analytics is no longer a value add, but it's essentially a necessity for us going forward. Now let's look at some of the real life use cases that we have collected from across the globe on how financial institutions have been leveraging the payments analytics to improve their payments modernization business case. We can broadly categorize the payments analytics use cases into four major buckets. The first bucket we can call out is we can use the payments data to gain customer insights. We can improve operations leveraging that data. We can also use that data to better manage risk and fraud. And lastly, data can be used to support compliance requirements for payments. Now let's take a deep dive into the detailed use cases for each one of them. To start off with the customer insights, we have a use case from a multinational European bank, who was challenged with the question as to how can I anticipate my customer needs and deliver more timely and relevant offers. So the bank then implemented an offers and cross-sell capability where they analyzed the payments transactions, integrated with the banking channel and the customer data to provide a wholesome view of data across the board, and use that to predict the anticipated spending of the customers and delivered real-time offers. This capability helped them improve the response on the offers by almost 50%, helped increase the client interaction matrix, and lastly helped overall increase the share of wallet that they could secure with the upsell that they were able to create. Similarly, looking at another use case, a Japanese bank was similarly looking at cash forecasting and was looking at how could they support their corporate clients to be able to monitor their account balances throughout the day. So they essentially used the payments transaction data, fed that into their enterprise analytics platform, and created a dashboard view of the money that was flowing in and outflows, along with overdraft alerts. This enabled real-time position monitoring for the corporate clients and truly enabled them for cash forecasting, which helped them increase the top line revenues and obviously through the value add cash management capability that they were able to enable it for their clients. Let's switch into the second set of use cases, which is related to operations. So this here we have the use case from a Canadian bank here in Canada, who was challenged with the problem of how do they trace the payments transactions in their systems and remediate the processing issues quickly. So this was pertaining to the ACH payments, which obviously go through the batch cycle. They're ingested, and it has to go through multiple processing cycles. And they were facing challenges on where sometimes the payment transactions were getting stuck, and the corporate clients were looking for a status. Unfortunately, the bank was not able to provide a view of the reason why the payments transaction was stuck and where that could be addressed. However, they were able to then integrate a monitoring dashboard with the key payments processing infrastructure components, including the file gateways, including the payments engines and others, and they were able to extract the payments processing data from these various components in order to provide a more proactive dashboard, which allowed them to track the payments across the end-to-end life cycle. This enabled the operations team to be able to search those transactions, those payments transactions, anytime in its life cycle, and obviously helped with the resolution of any such issues. So this certainly, from a benefit perspective, improved the response time for the bank in being able to respond to the client queries around the payments issues. Plus, it also helped them improve the operational efficiencies by identifying bottlenecks in the processing, which were subsequently resolved through automation. The next use case I'll talk about is for a European bank. They were challenged with the problem of automating and matching the matching of their invoices to the payments for their corporate clients. They had a scenario where they were issuing multiple invoices probably to the same customer, and in return they were receiving multiple payments from the same customer. So it was challenging for them to match either full payments or partial payments against those invoices. So this is where leveraging the data that was made available to them as part of ISO 20022, the remittance data that came along with that, and also the concept of virtual accounts, the European bank was able to automate the matching of the payments that they received against the invoices that they were issued. So in this case, for example, if there was a partial payment, there was a capability to use the remittance data in the payment instruction coming in to match it back to the invoices. This helped them avoid a significant amount of manual effort that otherwise their back office would have had to use to do the reconciliation, and thus helped also eliminate errors in the manual reconciliation. Now let's switch to the use cases around managing risk and fraud. Again, we have an example from one of our Canadian banks, which was challenged in being able to predict, detect, and investigate fraud and financial crime more efficiently. So again, they used predictive analysis and AI-based fraud detection tool to across their banking and insurance products to be able to detect fraud and money laundering use cases more effectively. They were able to also use data to be able to create new fraud models in real time that could easily be promoted and were able to catch fraud more quickly. So significantly, it improved their efficiency in being able to identify payments fraud. They were able to improve the 40% detection of suspicious transactions, and it also helped them reduce the false positive by almost 75%. We have a similar use case also from a global stock exchange, which was also facing a challenge, but around cybersecurity. So even the global stock exchange was able to use the data coming from the trades as well as security logs to identify threats in a more real-time fashion and be able to take corrective actions based on that, which help them be more effective in their surveillance and avoid the cost from the losses. The last bucket we'll talk about is the compliance. So obviously, we know in the payments industry, compliance is a big obligation. So from that perspective, there was a European bank which was challenged to provide an effective liquidity monitoring capability for their treasury department, so that they can monitor the liquidity in real time. So again, they were able to leverage the data that was coming out, both for the inbound and the outbound FI to FI counterparty payments. And they were able to ingest that into a liquidity management solution, whereby they were then able to create a liquidity position so that they could better manage the market risks. This also enabled them to make some real-time decisions around collaterals, how much to pledge, and so that way they were also able to make it more efficiently. Specifically in Canada, we know that with the launch of the links and also with the upcoming real-time rails, this is an area which is going to be a challenge and very significantly important for a lot of the financial institutions in being able to manage their liquidity positions in real time. So certainly this is a use case that we see as being very important in the short time. Um, the next use case is again around compliance reporting, where we had a North American retail bank. They had enormous amount of data coming out, both from customer transactions, the banking transactions, as well as payments. And the challenge they were facing is to how do we compile and aggregate all that data for regulatory compliance reporting. So again, working with the data and the capabilities, they were able to ingest all the banking and the payment transaction data into an enterprise data lake platform, and then they were able to enable self-serve reporting capabilities, both from a customer perspective as well as they were able to generate regulatory compliance reports, whether it's FinTrack or AML, that effectively help them both stay compliant from a regulatory perspective requirements, plus also gave them an optimized solution that helped avoid the operational challenges with that compliance reporting. Okay. So in summary, again back to the theme that we started off with, is the objective is to improve the payments modernization business case. Just meeting your regulatory compliance requirements is only going to add cost. However, by implementing payments analytics and some of the use cases that we just walked through, we strongly believe that there is an opportunity to drive new revenue through for your institutions. Plus, additionally, the savings that you can drive from the efficiencies is also going to further help improve the business case. So, with that, I would hand it over to Roger, who can help walk through more from a reference architecture perspective that we have seen
Mhm.
implemented at these clients that we have seen. And he'll talk through more about the roadmap as well. Okay, over
Yep,
to you,
I
Roger.
can I can certainly do that. Thank you, Namit. And so, Namit, we have a question in the Ask the Speaker chat window there around our experience managing or balancing the SLA requirements for real-time payments uh, in the context of what's needed for rigorous fraud management to ensure the security of those payments, because we know those payments are moving in real time. Money is moving in real time. So, what's our experience around that fraud element of those RTP payments?
Yeah, so certainly the fraud is a bigger challenge for the real-time rails, because traditional fraud detection is that we have till end of the day to manage or identify, detect fraud, and we have the opportunity to reverse the transactions. However, in real-time rails, the decisioning has to be done in real time, in line with the transactions, because these transactions are irreversible. So because of that, definitely being able to make a fraud detection in line and in real time becomes a very important. Now that said, obviously we do understand that fraud detection obviously has got has requires processing. But that said, this is where the modern fraud systems are coming in, which are able to do in-memory processing and other processing capabilities, which helps speed up the decisioning process. And through that process, they are able to support the stringent requirements for the real-time rails. So, as
Mhm.
an example, we have some of the solutions that we have helped with our clients in the US, especially to meet the TCH requirements for real-time rails, and we were able to support their 2.5 seconds, round trip, including the fraud detection as part of that SLAs as well.
Mhm. Okay, thank you. And architecturally, we've seen, as the money moves faster, the general rule has been the SLAs for fraud scoring in real time have gotten more stringent, right? Real time rails, other credit card schemes that are going to have stringent rules around how fast you have to do these things. it's pushing the envelope on technology around the dynamic modeling, the learning capabilities of these architectures that sit behind the fraud solutions that we're using today. And it's pushing them to use newer technologies, as Namit said, in memory analysis and in motion learning of transactions as they flow through these systems. So can we move to the next slide there, Namit?
Sure.
So one thing as we were putting this deck together that struck me from all the use cases was the key theme. If you look at the questions, the business cases that were being answered in each of those use cases, it was a how can I? How can I understand my customers better? How can I prevent fraud? How can I have a more global view of my liquidity in real time, right? How can I meet the regulatory and compliance needs that in the jurisdictions that I operate? So all of these how can I's are really the business drivers for all of the payments analytics, maturity and now modernization of payment systems around the world. So today, if you look at the payment schemes out there in the wire, real time, retail payments, cards, there's different schemes with different formats. And what that leads us to is a data lake that really has varying levels of information in it, right? Some are ISO 20022 formatted schemes, others are not. So there's varying degrees of knowledge around the transactions in the data lakes today. And that is just the legacy of the transaction history of all these schemes, SWIFT, links, chips, Fed, etc. Right? So the challenge today for the data analyst, the data scientist, the business analyst has been, how do I make sense of all that in all these different forms, in all these varying depths of information? It's a tough situation. It's been a challenge, right? The last 5 years, we've had numerous conversations with global banks around this very subject, and data scientists and business people sitting in the same room, looking at each other and shrugging their shoulders a little bit about it, because all the different depths of information, the formats, they're different. And so it became a real challenge. Data in one scheme is called different than it is in the other, and it has different sizes. So it becomes a real, I'll say, challenge in the early days to understand what we could understand from the data. How could we normalize it? How could we make any kind of meaningful inferences from the data, right? In the data lake as it sits today. Okay, next slide, please, Namit. Tomorrow, or in the next several years, if we can move to the next slide, there's change afoot. ISO 20022 is becoming more and more accepted around the world. Real-time payments, I think, was the leader here in the last several years. Most of the new real-time payment schemes in the world, in the various countries, are ISO 20022 based. Some of the legacy formats for real-time payments, like the UK's faster payments, are now coming out with a second generation of their schemes that will allow them to use ISO 20022. Wires is going through the transformation right now. SWIFT is going live with their first phase in November of this year, followed by the final phase in 2025. The Fed for the US is scheduled for November of 2023. And you can see others, Links and Chips and Interac in Canada here, all going to that ISO 20022 format in the next 3-4 years. So by November of 2025, what we have in the data lake or in the storage is a lot of schemes, a lot of different types of payments that all have the similar depth of knowledge of their of what that transaction actually is, whether it's wire or real-time payments. They're all headed in that direction. The outlier, of course, as you can see there, is the card schemes, right? Historically based for the last 40 years on ISO 8583. But as we move forward, I think they will also be challenged to be able to carry the rich amount of additional data that the real time and the corporate payments and the wires are carrying. So at some point, the card schemes may also start to transition to ISO 20022, but no announcements there yet. Okay, next slide there, Namit. So what makes this all possible? We need all this cool stuff has to have an architecture behind it that makes it work, right? The use cases you saw that Namit talked about all have an underlying architecture for the analytics capabilities that those customers are leveraging to figure out, to answer their business question of how can I do something better in the payments world, whether it's liquidity or fraud detection or predicting what my customers need next, right? In the world of predictive analytics. And all of that's happening in real time. So we need an infrastructure, an architecture that supports that. So this is a very high level overview of that architecture. There's major, left to right, it's kind of, here comes all of our data sources. They go through an ingestion, a cleaning, a transformation phase. They go into the data lake. Then on the right side, we've got, we need to make sure that the access to this stuff is secure because these are regulated payments, and we need to make sure that the data is accessed in a proper way by those who have the authority to do so. And then figuring out, exploring the data, discovering trends, gaining insights. What does all this mean? What is all this data telling us from a behavior perspective? What trends are emerging? What behaviors are emerging? What can we predict about the future? And all of that's going to be underpinned by analytics capabilities, information and database services, and security, and of course, running on a platform, whether this is on-prem or in the cloud. So let's look at the next slide. We'll put a little more detail to this. On the left side, all of the sources for payment information, and it's not just payment information. Yes, we've got all the wire information, all the card transactions, all the real-time payments, all the ACH transactions, things from the e-commerce portals, right? All of those transactions are flowing in through the left side, being transformed if necessary, cleaned a little bit, and then moved into the storage facility for the analytics to start on the right-hand side. So, but there's also many other forms of information that can be leveraged, not just the payment information, social media activity, locations of people by geospatial tracking, etc. There's hundreds of different feeds outside the payment ecosystem that could be leveraged as part of the payments analytics to further validate, authenticate, authorize, understand what's happening relative to those payments, but from these other aspects that are out there of social media and location, and did I use my own device that I always use for these kinds of payments? So all of that can be gathered and brought into the storage facility. Now the data scientists and the business people need to answer the how can I make insights into this information so that I can improve the experience of my users. I can give them value. I can offer them services that they may not even be aware of based on the history of their transactions and their behaviors. How do I get a view to fraud trends that may be emerging in real time and be able to put a stop to those as fast as possible? All of those insights really are happening, and in this world is happening in real time, right? Milliseconds, seconds. in some cases, minutes or a few hours in the case of wires. But in reality, we're looking at this data in real time as it's happening, doing an analysis on it. Learning is happening. Behaviors of models are being modified in real time. All of that really it's a highly dynamic architecture and situation for our customers, right? One thing we know about fraudsters, they move to the next easiest vulnerability as quickly as possible. So when one area of vulnerability has been closed by detection and prevention measures, they go looking for something else, right? They don't stop there. They just go to the next thing that they think they can take advantage of or leverage in some kind of fraudulent way. So this is a kind of a chess game that we're dealing with, right? And so being able to analyze things in motion in real time is really, really important. Okay, next slide. I just wanted to give you a couple examples, right? You see the reference architecture, you say, yeah, data can come in, it goes into the data lake, it gets cleansed, we figure out what to do with it. All of that infrastructure, I'll say for those use cases you saw, that reference architecture is what was leveraged. And then, components that IBM has that provide the facilities, the capabilities, to be able to support all of those functions you saw on the previous slide. But in real life, this is kind of what it looks like from things flowing through the ecosystem. We've got real-time payments on the left side and other payments coming in from systems of record into that ingestion and integration and transformation landing zone. Then they move into, maybe lines of business lakes, right? Some customers have lines of business that have their own data stores or data archives, and they have those so they can do fit for purpose reporting and analytics that are specific to their line of business. But everyone has multiple lines of business. So at an enterprise level, then all of those roll up to an enterprise data warehouse and a much broader set of analytics applications and views are applied to see what the whole enterprise is doing, not just what the line of business that handles wires or retail payments or real-time payments or ACH or e-commerce. But now we bring it all together at the top in the enterprise view to see how things look from a global view of payments, right? All the activity that's happened across the entire ecosystem and be able to provide insights to that, right? As payments from different mechanisms may influence each other or lead to trends and value, right, about activity, might not just be in one particular line of payment. It may be across multiple lines that insight is gained. Okay, next slide there, Namit. Thank you. Major components. This is just very high level what it looks like in the cloud. These architectures can be implemented on premise, but more and more they are coming into a cloud organization, right? IBM Cloud, other clouds out there, primarily because they want the ability to have flexibility in storage capacity and capability, but also, from a global perspective, they may be bringing together operations from all around the world into a set of or into a single data warehouse that is in the cloud. So like before, all the data coming in from the payment systems, all of the other information that the institutions have registered for or pay for as services, that all comes in and gets ingested. Here you see Kafka, real-time data flows coming in through Kafka, event streams from applications. So it's not just the transactions, but the event logs of the systems and other key information that happens in real time being streamed into the object store. And then on the right-hand side, this is the insight, the inquiry, the investigation, trying to identify trends, trying to figure out the how can I do something better? How can I prevent fraudsters from doing bad things? How do I make my payments more secure? How do I bring value to our customers, right, in real time? Okay, next slide, just to watch our time here. This, again, another example of a real-time ecosystem where Kafka is bringing in information in real time, mainly through event streams, but it could be through other mechanisms. There could be file transfers. There could be MQ originated traffic. There could be RESTful APIs invoking and sending transactions, and all that's coming in to this object store. And Spark, they're trying to figure out what it all means in real time. And the next slide, please. Thank you. So a little bit of a roadmap. How did our customers, that in the use cases that Namit was talking about, how did they go about this? And looking at our reference architecture, it's kind of a 3-step process. First, get the data into the data storage facility, right? From the data sources, from the payment systems, from the other registered inputs that you're getting from non-payment ecosystems, all of that coming in, getting cleansed, getting transformed, getting into the data storage facility. That's the first step, right? First, we have to have something to work on. And that is not an inconsequential step. It is a significant step. It takes a fair amount of work. There's a lot of feeds. Some of the banks have as many as 100 different inputs coming in through those data sources. And some of those are the payment systems themselves, but the vast majority are other feeds that enhance, enrich, and give views to things outside of what the payment systems can see. Second step is figuring out how to answer the how can I question that you saw in all of those use cases. How do I give my treasury department a global view of liquidity and forecast of cash needs intraday, but also days in advance, months in advance, based on what's happening today, but also based on history, as well as insights about how to make our customer experience better, how to stop fraudsters. All of these things really relay through that data discovery and experimentation and exploration. I'll say one that didn't show up in the use cases that we talked about that is emerging that I'll share with you is how can I make my operations of my payment ecosystems better, right? How can I automate through AI operations, DevSecOps? How can I leverage the data that's coming in here from all these sources to figure out how to predict what's going to happen, maybe, and prevent outages or issues with the systems that are running, and many of these are now running 7/24/365. How do I automate the operations? How do I manage all of these things with the leverage knowledge that that's in this data set that the AI and operations team can leverage to gain insight and to automate things to make the operations run more smoothly? And the next phase, which is the real-time analysis. And I talked about this earlier. The game here is real time, right? Data's coming in real time. It's being transformed and stored in real time. There is, research and discovery going on in real time, but it's really an analytics in motion, right? We're learning on the fly as transactions are received, as other information comes in, that is being ingested and understood, and really analyzing everything as it's moving into the system in real time. That is the key, right? As the question from from Ram earlier really was highlighting this. The real-time payments, we're moving those transactions in real time, we're clearing in real time. The key to having analytics that can act and react in real time is absolutely essential. Namit, any
Otherwise,
closing
also,
comments?
yeah, otherwise, also, both Roger and myself, we are available. Feel free to reach out to us in case anyone would like to have a discussion around this. We'll be happy to have further discussions on this topic.
Mm-hmm. Yep, and I saw a couple people reached out this morning on LinkedIn, so I'll get back to you as soon as I can today. And thank you.